Reliance's second quarter earnings have topped analyst estimates. It's become the first company to achieve sales of more than 1 lakh crore rupees in a quarter. On the downside, profit has risen 1.5%, which is the slowest pace in a year, and refining margins have declined. Shell has the fine print.
That's right. Reliance Industries reported second quarter earnings, and when you're looking at the overall earnings, they've been pretty much in line or rather slightly above what the street was anticipating. The street was anticipating a revenue growth of 9%. The revenue growth has come in well above 14%. Also, when you look at the profit number, our estimate showed a 1% growth in profits, coming at 1.5%. So clearly beating what the street was anticipating. As far as the GRMs are concerned, very interesting because the range that analysts were looking out for the GRMs was between 7.5 and 8. Now again the GRM numbers come in at $7.7 per barrel, so that's right in the middle and pretty much in line with what the street was anticipating. Couple of positive surprises, again the currency helping the second quarter for Reliance as well. On the other hand, also when you're looking at petrochemicals, the margins have grown and come in at 10.1%. Revenues have grown in the petrochemical segment by over 12, almost 13%. So these are a couple of the positives. On the refining front, the margins have fallen, come in at 3.3% versus 4.2%. So that's one of the negatives. But all in all, again, having spoken to analysts, they believe that the results are pretty much in line with what they were anticipating. So it'll be quite interesting to see how the stock really opens up in trade. Having said that, also when you're looking at Bloomberg estimates, it's the sixth consecutive quarter that Reliance has gone ahead and beaten Bloomberg estimates. So very interesting to see as the stock opens up for trade.
Here's what Reliance Chairman Mukesh Ambani said on those numbers. I quote, "RIL's first half performance reflects the resilience of our business model in a period of volatility and uncertainty. Optimal utilization of best-in-class refinery assets and inherent flexibility in sourcing product delivery contributed to a healthy operating profit from our refining business. The retail business continues to break new ground, growing 41% in the first quarter." End of quote.